Good morning and welcome to the early bird, and here we're looking at the S&P 500, and we were talking on Friday and Thursday maybe about this particular structure that we're looking at, and we were looking for a bounce off the 1300 here, and this would be the same for the Dow in its own way as well. And the Nasdaq and so forth. But look, we were looking for a bounce off, say, the 1300 here. Now, in that bounce, we were looking for Friday to be positive on our local market and also Monday to be positive as well. And that seems to be the case. So that's good, but that's about as far as it goes, because in this structure here with this golden sort of line here, we've got 5 waves down. That means that after a 3-wave counter trend roughly to the 61.8% mark, but anywhere between 40 and 80 is sort of the go. But the internal structure of this 3-wave correction is more important. But if we get 5 waves in opposite direction, and that's what this 5 waves is, after the 3-wave counter trend, then we will get another 5 waves down. Okay, so we could be looking at next week at being quite bearish. So we need to take that into consideration. And what we're also considering as well, while this market was moving down here, and we were looking at it being 5 waves down, or assuming or guessing that it was the same thing, that it was going to get 5 waves down. Once we got this 3-wave counter trend here, it was an opportunity to actually sort of exit the market, an opportunity to tighten up stops, and I think that's what we need to do on the Monday on the close. I think that a lot of the stocks that we're in, we need to lift up the stops. And we also need to be a bit proactive in setting up some robo trades for heading south next week. Now, that said, I just want to have a look at the next. This is 1 degree of structure that we're looking at here. Okay, so I want to have a look at the next larger degree of structure, because this is what we'll be sort of working with. So there's 2 situations here, and I don't have a clear answer for it yet, but you need to understand that. First of all, is this structure, this 5 waves that we're talking about coming down here, it can be an A wave, and then we get a B wave here, and then we get a C wave in here, right? And there'll be 5 waves in a C wave. There's always 5 in a C. So once we've got that A, B, C correction there, then the market can push up and make a new high. Yeah, and in fact what this would be this would be up for wave 1 here, and then this would be an A, B, C for wave 2, and then we'll be pushing higher through that. Okay, so that's one way of looking at this, the next degree higher. That's one way of looking at it. The other way is that this is not a wave 1 here. This is actually a 5th wave, and it's the end of this structure here. So that means that we'll be having a top in place and having a much larger structure. So the ABC here would last say another week, whatever this one lasted, something the same. But if this was actually down for wave 1, back for wave 2, and then down for wave 3, then 4, then 5, we get a larger 5 waves down. Not this 5 waves here, that's just the C wave here, but and it will move down like this as well. So it'd be down for wave 1, back for wave 2, down for wave 3, 4, 5. So it'll be a much larger structure. I might go to a bigger chart here just to explain this a bit better, because it's rather important. So this is the S&P 500 here, and what we'd be looking at through here is that we've had up through here. We can assume this is 5 waves up through here. Okay, so once that's complete and that's completed, we'd be looking at an ABC here, and that's what we'd be looking at like that. So we feel that we've got 5 waves down here, and those little 3 waves that we've had over the last 2 days are these little guys in here, and that's nearly complete there. We can talk about that later, but once that's complete, we'll be looking at a 5-wave structure down through here like this. So that would be the the A wave, the B wave, and the C wave. And the C wave has always got 5 waves in it, the same as the B wave has always got 3 waves in it. So once that's finished, then we would be pushing up from here, right? So this would be a larger structure unfolding here. And in fact, what we'd be looking at here, this would be up for wave 1, back for wave 2, up for wave 3 in 5 waves, back for wave 4, and then up for wave 5. So essentially we would have a much bigger pattern unfolding here like that. And then that would be the top of that structure. Okay, so that's the positive news, that's the good news. Okay, and the reason that I'm running with this particular situation here is because one of the reasons is that the S&P 500 is actually below this high here, right? So there. Now the other flip side to this of being a bear market, if we can just clean this up a little bit, so just keep that in mind because we'll be talking about this much more. So this 5 waves coming up through here, normally if it was going to, we're calling it wave 1, but it could be a 5th wave, but normally a 5th wave would be higher than this mark here. And that's quite true. If we look at, this is the S&P 500 here, if we looked at the S&P 1000, yeah, then we can see that here we've had the ABC here, but then we've had this push higher than here. So that kind of makes a nice 5th wave up there. Okay, so it's pushed high, and there's other markets like this that have done that. So if we look at the transports as well, the Dow Transports, that's made a new high above its corrective process there. The industrials of the Dow Jones itself has made a high here. So technically that's fine as a 5th wave here. But we're also at the moment calling this up for wave 1, an A and a B and a C, back for wave 2, and then further up. So that's the possibility. But because the S&P 500, because these markets here have made new highs here, like the S&P 1000, so then we've got to have a look at the situation coming back to the S&P 500 here for a moment, in terms of having a look at this as just assuming that this is 5 waves up through here to be the 5th wave. So we got 5 waves up here to be the 5th wave. So then the scenario would be, if that was a top in place, it would be like this. Okay, and then what would happen after that would be another 3 waves here coming back up 50-60%, and then another 5 coming down this way here. That's the bearish scenario of that. And what we've got in here, of course, because I haven't updated all of this, is that we've got what we've been looking at on the intraday level, of course, is that we've got 5 waves down through here, and over the last couple of days we've got 3 waves up through here, and then we'll be looking at this wave structure here. So in this wave structure here, as the same as the bullish scenario, we're still going to get that 5 waves down to this point here, because there'll be 5 waves in here. And then we'll get that little bounce there, so then we'll get a little bounce anyway, moving back up from here, right, somewhere in there. But we won't know until we get into this point here if we're going to have a larger bear market, or we're going to have a bull market going up at that stage. So we won't know until these 5 waves play out, then we get the bounce, and then we get to see what structure starts to develop from this point here. Okay, so a bit of a tricky thing, and a bit of a waiting game. However, what we need to do is we need to flow with the bends in the river in terms of our trading, because we could get both of these, and it's sort of no good getting to the. We need to play a tighter game and position ourselves for either of these. That's what we need to do. So next week we're going to be tightening up our stops, because we're in here. And this is a very high probability of this coming down through here. That's where the bias lays, and that's what we need to sort of trade with that. So we will tighten our stops within reason, because if we're totally wrong and this continues to move up from here in some way like this, then we need to be capturing that as well, don't we? Yep, so we need to bring our stops up, and this is the idea here, to bring the stops up. And we also need to look at the robo system in terms of daily and weekly to start positioning ourselves for short positions through here. Okay, so that's our game plan. It's not going to be perfect, but taking the middle of the road approach, we should come out of it all right. So it's not a matter of uh, being right. It'd be nice to sort of be right, but it's more important to be on the right side of the market for the moves that are going to occur. So we have long trades in there. We started to get short trades in here last week, so we can sort of look to add to some of those. In this scenario here, we'll be looking for others that are running out of steam, and we'll sort of build to this side here. And yeah, anyway, that's it. You know, that's how I see it. And that's what we'll be sort of talking about and trading through. So let's see how we go with that. The market drivers in terms of what's we got here? We've got gold here. So, you know, we've had a bit of a bullish sort of picture on this, you know, for quite some time, and our sort of target was is the 1500 here. So once the market gets to there, it's really the price is going to be held there. Okay, so we're not, you're not going to miss out on a lot from this point here. So it's, you know, when we come up to a level like this, we're basically getting out of the market and finding another one. We don't normally trade through this and all those sort of things. We just go find something else to trade. So that's pretty much what we're going to do, but of course we sort of analyze this as well. But what we're looking for here is we're looking for 5 waves up to complete this situation here, and then see a larger correction at the 1500 here. So we'll be looking for something like a 1 and a 2 here, and then we'll be this could be the 3rd wave to here, and that could be the 4th, and then we could have the 5th already in play there. So it's very possible that this may look something like this already here, and we're only going to get to somewhere at the 1490 here. The other scenario is that it will grow up and come up to the 1500 there. Either way, this is an ending situation. It's not a beginning. Okay, so we'll see that play out through there. The oil market is pretty much doing what we sort of expected it to do. Now, we've talked about this a fair bit through here, so you know what we're sort of on about here. Now, in that, we knew that there'd be a sort of a retest of the 8 or the 10 here. The 10 is the minor trading level, and it's the main level in all of this. And what we are unsure about is that is this a wave 1 down to here? This is a wave 2 back to here somewhere, failing to gain support on here, and then we'll see this move on down through here. Okay, the other scenario for this to play out is that this is just the A wave here, this is the B wave here, this will be a C wave here, and then we'll be moving up from that point there. We'll be moving up much further through there. That's the scenario there. So this would be an A and a B, and it could even go higher into this area here, and then a C wave in 5 waves, and then we start working higher through here. The 104 here is pretty much the line in the sand of being weakness there. So that's what we're looking at there. So last week we understood that we would be seeing a retest of here. Then we need to watch this space here to see what occurs here. So this is still needs to unfold. Either way, it's still got another swing in it. The 3-wave swing: the A, the B, the C, and then up. Or this is down for 1, back for 2, and then we start moving down through here. Now the difference is that if this was a wave 1 to there and a wave 2 to there, and this is a wave 3 coming down, the wave 3 will come down very fast, okay, in its personality. If it's going to be a C wave, it will be more of an angle like this, yeah, a bit of a lazy sort of situation here. And normally this move down here in the A wave is normally sharp. This is normally simple, complex and complex here, or simple, the opposite. But normally if this is on an angle coming back here, then we know that it's a C wave and we can look to trade that higher. If it comes down fast and sharp down through here, then we know we've got a third wave unfolding through here. Okay, so anyway, we're getting there. You know, we're just spending time with this to understand the bigger picture. That's all we're doing. So and we'll catch the bigger bearish picture or the bigger bullish picture. So best not to get sort of caught up in this. Okay, now copper, as we talked about late last week, we were looking at 5 waves coming down through here. Now that 5th wave may be in there, that may be there because there is a little A, B, C in here in terms of a little A, little B here, and then a C wave up there. So that could be the wave 4 there. I have to say it's a bit small, but we got to kind of put it there because we've made a new low here. So that can be the 5th wave here, and that's okay actually because the extension was in the 3rd wave, wave 1 here. If there's an extension in the 3rd wave, that means that wave 1 here and wave 5 will be about the same time and size and so forth. So that's a possibility that the 5th wave is in and we'll get some sort of ABC rally. The flip side to this is that the wave 4 hasn't finished, and we're still looking for that to unfold further in terms of an A wave to there, a B wave to there, and a C wave up to here, and then wave 5 coming down through here. So once again, not too sure, but give it a couple of days and we'll have a better idea of what's what. But the main point is that it's not going that far through here. If we're looking at the material sector of our market here, the XMJ, we can see there's a couple of things here. We can see that the material sector's been sold off at the 1500 here, which is a medium level here. And I was wondering, as I pointed out last week, is this just a wave 4 to this point here? So still don't know, or that is a top in place there. So we still need to work that out. A bit like our sort of local market really as well when we're looking at that, because possibly in a 4th wave here. But when we start looking at the banks, our local banks, we start to see a very clear from this March run up in our banks, we start to see a very clear wave structure like this here sort of completing. So we should see more of a sell-off happening there as well. So yeah, okay. Yeah, I'll just come back and have a look at, oops, sorry about that, excuse me there. Just having a look back at our local market here. This is the SPY here, and I have to say I'm a little bit unsure about the wave count through here. It does appear that it's an ABC correction down to this area here, and just as I was talking about a wave 4 on the XMJ there, this may show up here like this as well, in terms of 5 waves down here for the A wave, the B wave, and then some sort of 5 waves down here, but that's not very clear. The bias has got to be taken up though, that this market here didn't push up very much on Friday, where the US markets recovered a fair bit. These ones didn't move as much here, so there's a fair bit of weight floating here on the SPY here. This is the closest level here, and it's the 4900. The last time here we were looking for support on the subgroup 1 level here, 10, 20 and 30 above here, but we didn't get support on here, so we didn't go long. And we can see now that at the 4900 here, this is slipping under here and is retested. This is resistance here. So what we need to have a look at here, being under the 4900, it kind of swings the bias to the bearish side, and also that if we're correct with the US analysis on the S&P 500 and so forth, then it's also going to weaken this as well. So We'll see sort of Monday up a little bit, but after that scenario, if this area here is broken on the Tuesday, then you can start to look to be short from that, or we may even get shorts from further up here as well. So this 4872 here, and the subgroup 2 area, which is the 65, 72 and the 80 here, will play out here, and you really need to be on the right side of this number. Alrighty, well that pretty much sort of covers it. Just sort of recapping there a little bit in terms of the S&P 500 here. We're looking for 5 waves down. We just don't know if it's the C wave or wave 3 coming down. If it's a C wave, then it will come down on a bit of on an angle. If it's a wave 3 coming down, well then it will come down rather quick through here. So any bad news will hit the market pretty hard. So that's what we're sort of looking at. This particular structure here would be something similar to this structure over here, and should last about the same time. So, you know, we can have that sort of week of bearishness there, and you need to accommodate that in your thoughts there. So this particular structure that's moving up here, this A, B, and C structure here, may not be complete just yet. So you see how we got 3 little waves there? So on the US session, we should see a little push up here higher, so we can accommodate this a 5-wave structure in through here. But given it sort of Tuesday, Wednesday, we should see the 320 being retested again. So once the 320 becomes the resistance here, then you'll know that that will be heading south, and you'll need to be a bit proactive in that. So yes, a little bit further on the bullish side here, but look out for the news that will drive it to the lower side. Okay, so that's it. So good morning and good luck.